Hola from Mexico. I'm Bob Henderson. I'm the Nomad Dad for the Nomad Capitalist, spending part of the year outside the United States in Mexico, very mild climate where we are, on a lake in the mountains, and it's very nice to be here. Glad you stopped by today. I wanted to talk a little bit, by the way, most of these ideas that have been presented to me came from Andrew's staff in Tbilisi that is behind the social media and the video production, and so I want to thank Taco and Lika for that. And I want to thank Alexander from Belgrade, Serbia, coming to Mexico to film for us, and Beograd, as it's called to the natives, on the Danube River, Belgrade, Serbia, part of the old Yugoslavia. I wanted to talk a little bit about investments because this is one of the suggestions, and I was in the business for a long time. I'm no longer licensed. So please do not consider this advice because your situation is different than the other person who's watching and may be different from mine. I'm just going to give you some very basic things to think about. So you consult your own research, your own advisor. I am not giving specific advice here. But it seems to me that we've got two things to look at, and it would be inflation and deflation, which is usually, deflation is very rare. Inflation really has not been a huge deal since, the early 1980s. And from 1990, for about 30 years or so, you had declining interest rates. You had the biggest bond market, bull bond market in history. And you've got interest rates at, 5,000-year lows. We have seen in the last year or two negative rates in much of Europe, especially in Germany. The largest economy in Europe, you had negative rates, I think, at, minus 50 or 60 basis points. They went negative for a while in the UK and in France and in Japan for many, many years, and right around the flat line right now. So that is something that is just out of the ordinary, and something that we haven't ever seen in our lifetimes. We're talking pre-biblical times, quite frankly. So the point is, deflation is not something that, because the government can do things to get us out of deflation. Maybe it's not a positive thing, but they can do things. Inflation is something that really hasn't been in the nomenclature for the better part of 30 years to any extent. You're in the 1.5% range, maybe 2%, and now we've been, in the last year and a half, been running well above that. So how are you going to invest? Well, inflationary hedges would be real estate. Income-producing real estate would be great. Whether you buy a REIT or whether you own commercial property, apartments, although, you've got the risk of the government saying you can't collect rent. That's a big problem. Stocks are always an inflation hedge. It looks like Bitcoin has been a hedge against that, Ethereum. And of course, the classic, speaking of 5,000 years, gold has always been the winner. Silver, especially if we're going to a green economy, because of its industrial usage, might be the answer. It's had a hard time taking off for some time. Maybe it's because a lot of younger folks have gotten on the Bitcoin train and not the gold train. I don't have an opinion on whether one makes sense over the other. I probably have a little bit of both. I'd have some gold and silver, and I'd be a hodler. Just make sure that, you may want to store it somewhere, the gold. You may want to store it somewhere offshore. You might want to have some handy as well. I think you need, if it was a disaster, you'd want some nearby. So I don't have an opinion one way or the other, but I do think that maybe a little bit of both makes sense. Stocks, bonds for deflation, but you could buy TIPS, Treasury Inflation Protected Securities, which would give you the inflation kicker on U.S. government bonds if we saw a lot of inflation, and so these are some of the ideas that I think we want to look at. If we're going to have sustained inflation, I might want to have a little bit of debt. I wouldn't want to be over-levered. But you know, if I've got 4, 5, 6% inflation, I'm paying back with cheaper dollars. Now, I don't want to have a debt to equity ratio of any more than, I don't know, 40 or 50%. I really don't. I'm not that aggressive. I'm a little bit older, but even if you're younger, I don't think that a tremendous amount of leverage, because this thing could turn on a dime and go deflationary on you, the particular currency that you're in. And, you know, as I've talked previously, using that line from the quiz show, The Newlywed Game, you can always expect the unexpected. I mean, that's the world we live in today. So I wouldn't be 100% down one path. I'd more than ever be diversified. I'm not sure I like the 60-40 stock mix so much. I might want to have some alternative assets. Cash, if you're going to have inflation, is trash. There's no question about that, but you probably need some for opportunities or maybe to cushion the blow or in certain situations. Never hurts. And so I guess what I'm saying is you want to have some in the inflationary camp, you want to have some in the deflationary camp, and of course you want to look at the tax aspect of some of these things as well. And we all know that I think the tax laws are going to continue to evolve and going to be more adversarial as we go forward. I think you might want to have some assets in maybe a couple of different locales, whether that's metals or whether that's real estate or a business or what have you, for diversification. But again, some in the inflation camp, maybe a little in the deflation camp at the very least, and be ready to be nimble. You know, we used to read, Andrew, I don't want to call it a fairy tale, but one of the nighttime stories about Jack be nimble, you know, Jack the Beanstalk, Jack be nimble, Jack be quick. In these days, you need to be nimble, you need to be quick. And so don't be wedded to one idea. Be ready to change your mind. Don't worry, recency bias is something that has to go away. Be humble. Be ready to admit your mistakes and move on to something that makes more sense. Those are my thoughts for today. I'm Bob Henderson. I'm the Nomad Dad for the Nomad Capitalist.